Hi, I'm Jordan Roy Byrne. I'm here at the November 2019 Metals Investor Forum, and I'm here with Kevin Keough. He's the president and CEO of a new company called Evergold. Kevin, thank you so much for being here.
Good to be here, Jordan.
Kevin, as I said, Evergold is a new company, so most of the audience is probably not familiar. Why don't you let us know about Evergold, how it came to be, and what your plans are for this coming year?
Yes. Yes, Evergold is really new. We just completed an IPO on October 4th this year, so all free trading stock. What's unique about the company is we've structured it around 4 properties and only 4 properties, 2 of which are flagships, but all 4 properties are located in British Columbia. And I think from an investor standpoint, what we're really offering is the prospect of immediate discovery potential when we turn the drills on next June and July on our 2 flagships. We have 2 exceptionally good properties with targets that we can touch and feel, and we're feeling very confident that we can deliver discoveries of merit.
So what is the work that the company needs to complete from here until the drilling next June?
Yeah, actually very little. We've actually spent over several years as a private company. Prior to our IPO, we did quite a range of geochemical, geophysical work, geological sampling, et cetera, and evaluation on our properties to bring them to the drill ready phase. So really, you know, what's really going to change things up in the near future is actually doing the drilling. That's really why we went public, was to obtain the funds to do the relatively more expensive work of drilling. And frankly, I think that's the work that investors generally care most about, you know, what are your drill results going to be?
So we're obviously at a conference. There's numerous companies here. I mean, there's numerous companies that investors, speculators can invest in. So how would you say Evergold differentiates itself from the typical junior?
Yes. I think investors firstly should be prepared to gamble a little bit because we're very early stage. Having said that, I would advise early stage investors to look for companies that when they get public do have immediate discovery potential. I'm not talking 2 or 3 years out, but companies that can deliver it in the first kick of the can. That's where we're positioned. We think we can deliver results in our first drilling kick at the can. And that's really what's exciting. I think it differentiates us. We're not an advanced player. I think investors should look at us as a capital gains opportunity subject to the results we can pull out of the ground. And we know in our industry that if you can pull really strong results as an early stage penny company, that you can get a terrific multiplier effect on your stock value. We have done this before. We have a proven track record in BC for delivering major discoveries, and we think we can do it again.
And I believe you guys raised $3.5 million, which for a small early stage company is significant in this current market for juniors. So I know that you said you're not going to be drilling until next June. So $3.5 million, that gives you a healthy amount to put in the ground. Can you quantify exactly what you're thinking about as far as how many meters you might drill or how many drill holes? Just help the audience understand, you know, how many kicks at the can, so to speak, you'll have to make that big discovery.
Yes. Our plan, and we laid this out in our prospectus, which is available on CDR now, and it's a tentative plan, but we're going to try to drill our 2 flagship properties concurrently. And we'll target in our first phase of drilling, both on Snowball and on Golden Line, these are our flagships, about 2,000 meters of drilling into Snowball and another 2,000 into Golden Line. That will test a number of targets that we put our finger on both properties. And if those results come back very strong, and we'd start that drilling likely in June, if, for example, by the end of July, we've returned strong results from some of that first phase drilling, we would then scale the program up for the remainder of the season, and we might end up with considerably more than a total of 4,000 meters of drilling combined. It could be more like 10,000, 12,000. It all depends on success.
Okay, I have a different kind of question as far as the timing of buying the stock, because people, they might hear and they might think, okay, well, I don't need to buy, if I want to buy the stock, I can just wait several months. I don't need to buy it until May or even June.
Yeah.
And it's also something I'm curious about.
Yeah.
I mean, we know there's a seasonal pattern to these types of plays, so I guess maybe you could give some color on that as far as, is there a better time to be buying? Does it make more sense to buy in the winter, or is it better to buy in the spring, or is it just on a case-by-case basis? There's no real answer. I know there's a lot to chew on there, but it's something I wonder about, and you have experience in this area, so lend us your expertise.
I would say it is, of course, tough to call, right? Every time you think you're going to call it the right way, you usually end up being wrong. But the pattern generally is this. You have a new company. The market knows we'll be doing our significant work starting next summer, June, July. Some people argue between now, November, and the end of the year, there'll be tax loss selling. That's not really relevant to us because nobody's lost money. They bought the IPO at 20 cents. That's where we are. But if they have had other losses on other stories and have to cover their calls, they may sell some of your stock. So I personally, in our case, don't think we'll have much erosion in share price through the end of the year. But I tell people we could go down. We could go down to 13 cents. To 10 cents, whatever, or we could go sideways. I tell them it's kind of irrelevant whether we're down some, because what'll happen in the first part of next year, everybody starts to look towards summer. And they realize they better get in now or they may lose out. And I think we have a track record of delivering discoveries. You'll see the stock start to appreciate gradually in the first part of the year. And it'll probably get up above our offering price. It may be difficult for investors to buy the stock when they want because not too many people seem to want to sell it even right now. I would just advise people not to be too sensitive to the price short term because the potential to multiply your investment is very significant. We have done it before with plays like GT Gold, where our stock went from 40 cents to almost $3 on our initial discovery holes. Gave a lot of it back. We had more discovery holes later. It went right back up again. Very volatile, but that's the nature of the game. We are trying to deliver discoveries of merit that could lead to a mine, but it'll be a very up and down process getting there.
Okay, very good. Now, Kevin, as we close, can you tell the listeners out there and the viewers where they can go to find out more information about Evergold and how they can contact you?
Well, sure, Jordan. Of course, we have a website. It's evergoldcorp.ca or .com. Either one will get you to us. And they can also go to SEDAR, SEDAR.com, which is where all the public companies in Canada have to put out their public documents. So we have a profile there. The website is pretty thorough, and I think that's everything you pretty well need. And of course, people can call me anytime. 613-622-1916.
Thank you, Kevin.
All right, thanks, Jordan.